80 CCD, that is deduction to the pension scheme which is notified by central government. So let's understand, this is called as NPS, that is National Pension Scheme. So let's split this into different categories. Number one, for a salaried person, you can split this into two. That is for employee contribution and for employer contribution. What do you mean by employee contribution? To the pension fund, both employee as well as employer contributes. At the time of retirement of employee, that pension fund will make him a retirement benefit. Yes or no? So, for the employee contribution, he will get a deduction. He will contribute it from his monthly or annual salary. He will get that amount contributed as a deduction. And how to claim that deduction? You can split that also into two. This deduction, again, you can split it into two. Number one, under section 80 CCD subsection 1B. 80 CCD subsection 1B up to rupees 50,000 is allowed as a deduction. There is nothing, no condition, nothing. If your annual contribution is up to 50,000, you can straight away claim it as a deduction under 80 CCD. Are you all with me? CCD subsection 1B. If your actual contribution in a year exceeds 50,000, then up to 50,000 only you can claim it as a deduction. If it exceeds 50,000, then you have to compute deduction under section 80 CCD subsection 1, subjected to a ceiling limit that up to 10% of basic salary plus DA forms part of retirement benefit only is allowed as a deduction. Say, friends, listen, if your actual contribution exceeds 50,000, for the excess, if you want to claim any deduction, that you have to claim it under 80 CCD subsection 1. And under 80 CCD subsection 1, you cannot claim the entire excess. That excess is again subjected to a ceiling limit. What is the ceiling limit? 10% of your basic salary plus DA forms part of the retirement benefit is a maximum deduction under 80 CCD subsection 1. But the interesting factor is under 80 CCD 1B, there is no such ceiling limit. You can claim up to 50. If your actual contribution is over and above 50, that excess have to be dealt under 80 CCD subsection 1. And under 80 CCD subsection 1, the limit is basic plus DA of retirement benefits 10%. I hope it is clear. Now, it is not yet over. They are also saying one more restriction here, that the restriction is at say 80C deductions plus 80 CCC deduction plus 80 CCD subsection 1 deduction altogether should be always less than or equal to 1,50,000. This is the overall limit. See, we have completed 80C deductions. Yes or no? How much was the total 80C deduction? 1,50,000. 80 CCC we have covered. What was 80 CCC? LIC's pension fund. That you will get a deduction. There was no separate ceiling limit for that. Now 80 CCD subsection 1, you will get a deduction over and above 50,000, subject to 10% of basic salary plus DA. That is allowable. But there is one more ceiling limit. That's altogether, all the deductions under 80C plus 80 CCC plus 80 CCD subsection 1 shall be always less than or equal to 1,50,000. From which section, how much you have taken deduction? Irrelevant. You add these three and say restricted to 1,50,000, bus. Are you with me? From 80C, how much you have taken? 80 CCC, how much you have taken? Irrelevant. What you need to do is overall deduction shall be maximum 1,50,000. That's what you are supposed to write in exam. Don't write 80C plus 80 CCC plus 80 CCD subsection 1 equal to 1,50,000 straight away. You need to compute it under each section, subject to their own ceiling limit. Or at the end of the working note or at the end of the question, you have to write maximum deduction shall be subjected to 1,50,000 rupees. Now, listen, for 80 CCD 1B, there is no such ceiling limit. That is the advantage. 80 CCD 1B is out of any ceiling limits. 50,000 you claim. You claim without checking anything else. Over and above has two ceiling limits. Number one, under 80 CCD subsection 1, that is basic plus DA, maximum 10%. Then overall ceiling under 80 CCE. This section is called as 80 CCE. under section 80 CCE. 80 CCE states that 80C plus 80 triple C plus 80 CCD subsection 1 shall be less than or equal to 1,50,000. Now, let's move on to the employer's contribution. Now listen, this employer contribution is actually a cost for the employer. Yes or no? He can already claim it as a deduction under 36 PGPP. We have already covered that. Are you all listening? Now the point is, this employer contribution is first taxed as profit in lieu of salary in the hands of employee. The employer contribution is taxable as profit in lieu of salary. What is profit in lieu of salary? Just like salary, you have received something from your employer. That is said to be profit in lieu of salary. Just like salary, you have received something from your employer, some benefit from your employer. Now listen, when an employee receives this employer contribution to pension fund, that annual contribution is initially taxed in the hands of employee as salary. Thereafter, he is eligible to claim deduction. Now tell me, who can claim this employer contribution as a deduction? Who can claim this employer contribution as a deduction? For employer, under 36. For employee, initially it have to be treated as salary. Thereafter, you have to claim it as a deduction under 80 CCD. That's what we are about to discuss. So what department say? Under section 80 CCD subsection 2, up to 10% of basic plus DA form part of retirement benefit shall be the deduction. Under 80 CCD subsection 2, they say 10% of basic plus DA forms part of retirement benefit is allowed as a deduction. I hope that is also clear. Now, this is how you claim deduction under chapter 6A 80 CCD. You have to split it into employer contribution and the employee contribution. Now, listen friends, if your employer is central government or state government, if your employer is either central government or state government, then instead of this 10%, the limit shall be 14%. For central government and state government employees, employer contribution, there is an extended deduction. What department say? If you are a central government or a state government employee, then instead of 10%, it shall be 14%. Only the employer contribution. The employer contribution shall become 14%. I hope it is clear. Now, let's solve a problem for a better understanding of this particular flow chart. So, please take question number 2 and give me the answer. It's in page number 35 again. This question will give you a better understanding of 80 CCD. Alright friends, so let's go through the question and solve the answer. The basic salary of Mr. A is 1 lakh per month. He is entitled to DNS allowance, which is 40% of the basic salary. So, basic salary is 1 lakh. DA 40%. So basic is 1 lakh and DA is 40%, that is 40,000 rupees. Now 50% of the DA forms part of the retirement benefit. That means out of this 40,000, only 20,000 forms part of the retirement benefit. Yes or no? Listen, 40% of basic salary is the DA. Then 50% of DA only forms part of retirement benefit. That means ultimately only 20,000 forms part of retirement benefit. So basic plus DA will be 1,20,000. Now, both Mr. A and his employer contribute 15% of basic salary to the pension scheme. So 1,20,000 into 12 months. How much is basic salary plus DA into 12 months? 1,20,000 into 12. It is 14,40,000. Alright, now listen, how much is the actual contribution? That is 1 lakh into 12 into how much? 15%. So, how much will be that? 12 lakh into 15%. How much is the actual contribution? 1,80,000. 1,80,000 is 15% on 1 lakh into 12. So, this is the actual contribution. Then how to take deduction? First, we will consider employee contribution. For employee contribution, up to 50,000, there is no limit. How much is the rest? 1,30,000. For that 1,30,000, you need to check 80 CCD subsection 1. Under 80 CCD subsection 1, how much is the maximum deduction? 14 lakh 40,000 into 10%. That is 1 lakh 44,000 is the maximum deduction. Yes or no? Since your contribution excess is only 1 lakh 30, that you can claim it as a deduction. And in total, 1 lakh 50 plus 1 lakh 30, 1 lakh 80 you can claim it as a deduction as employee contribution. Now to the employer contribution. Employer contribution, basic salary plus DA is 10%. That is 1 lakh 44,000 is only allowed as deduction. So this is how it is. For employee contribution 1 lakh 80, full you will get it as deduction. Employer contribution 1 lakh 44,000 only will get as a deduction. Is that clear? There is one more thing that you have to consider under this 80 CCD, that is for self-employed persons also. They can take this, they can start with this national pension scheme. Self-employed persons, how to take this 80 CCD deduction? You have to split this into two. That is under section 80 CCD subsection 1B up to 50,000 rupees you can claim the deduction, and under section 80 CCD subsection 1 they say 20% of gross total income. These are the limits, and this is also subjected to 80 CCE. What is 80 CCE? 80 C plus 80 triple C plus 80 CCD subsection 1 shall be less than or equal to 1,50,000, which is mentioned under 80 CCE. So listen, self-employed persons. Listen, what do you mean by self-employed person? A person who is doing job by its own. He doesn't have an employer. So there is no employer contribution in that scenario. So what you need to do is, self-employed persons contribution have to be splitted into two. He can maintain national pension scheme. He himself can deposit into that particular scheme and take the deduction. If he himself deposits into that particular scheme, up to 50,000 he can claim it as a deduction without any limit at all. The contribution which is over and above 50,000 have to be deducted under 80 CCD subsection 1, just like the employed case also. 20% of the gross total income will be your maximum deduction under 80 CCD subsection 1, and that is subjected to an overall ceiling under 80 CCE. And how much is that overall ceiling? 80 C plus triple C plus CCD subsection 1 shall be lesser or equal to 1,50,000 under 80 CCE. That's what the department says for self-employed person. Don't ask me, sir, why there is no employer contribution? Because he is a self-employed person. There won't be any employer contribution for the self-employed person. I hope that is also clear.
To purchase recorded lectures and textbooks, visit our website www.cajosekurian.com.